Hey, it's David here from Freedom Founders. One of the interesting problems that a number of, quote, successful people have as they create their businesses, or maybe it's their investments or a combination thereof, is they've worked really hard to do a good job of being good stewards of their money and invested it well. And they get to a point where they have a considerable amount of equity. I mean, the business or the investments, could be real estate, is worth a lot. And it comes a time when I believe you've got to take some chips off the table, meaning harvest that equity. Now, it's hard to do when you have nurtured your businesses, or your investments, particularly in real estate where it's tangible, it's hard assets. You've nurtured them, you acquired them, they're producing income right now, and you're thinking, well, I don't want to let go of that because I don't know what else I do. It's a pivotal question. And what I know is that there are a number of people, and I can think of one in particular. I can think of a number of people, but one in particular is a doctor, and he has a business in medicine, several practices, if you will, that serve a certain type of clientele and population. I'm not going to tell you what it is to keep him anonymous, but he's done really, really well. Relatively young, like 40 years old, and has a run rate of about $20 million in these businesses. I mean, he's got the capital from those businesses. He doesn't have to sell the businesses. Yet these businesses are highly regulated and have a lot of liability associated with them because they deal with insurance, government regulated Medicare and Medicaid. Scary place to be. So the problem is he's got a lot of liability. If something goes wrong, if the government decides his business is doing something improper, it doesn't have to be really an at-fault situation. The government can decide, right? Could take everything down. And I've counseled him. I said, look, you've got a lot of equity. What would it take for you to sell that business and probably take $50 million off the table at 40 years old? How much more do you need? You don't need to be a Bill Gates or a Jeff Bezos and keep cranking it. Maybe there's time to take chips off the table. Same thing with investment properties. Let's take a little bit lower scale. Let's say you've got a single family rental house that you bought at, let's say, $200,000 8 years ago, and it's now worth $600,000. And the value's gone up, the rent's gone up as well, but the rent doesn't go up as fast as the value. So now the rent to value ratio, or the return on the equity, not the original investment, that's been good, but now that the equity is higher, the actual return on that equity is much lower than it was. Again, probably a time to consider taking equity off the table, meaning either sell that property or exchange the equity into other properties, re-leveraging or reallocating and getting a better return. Because again, the markets go up, they go down, and sometimes you can't catch it at the top exactly, but you can catch the waves. Being early is better than being late. So again, if you're in a situation where you've got considerable equity in businesses, real estate, investments, gosh, even your own home, if you could downsize and pull equity while you're at the top of the market, reallocate that equity into investments that don't have that downside risk when a market cycles, you might be better off. It's something to keep in mind. Not easy to do, but something to at least keep in mind. I hope that's a great tip for you today. Remember, always stay focused on your freedom, and I'll see you next time.